Hello there. This is James, and you're watching OneRoyal, and it's live. In fact, it's not just OneRoyal, and it's live. You're watching OneRoyal presents a watch-along of the non-farm payroll, which leads me to say a very happy NFP day. I get a lot of highs. Hello there. Hi. Excellent. Hello. Hi to every single one of you. Now, before we get into this big event today, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. With that out the way, let's get started. So yes, indeed, today's the day we're going to get the non-farm payroll due in literally 14 or less than 14, 12 minutes. And this is going to be a big event because last month it was a real shocker. Because it's such a big event today, I'm not going to watch this on my own. Of course I'm not. I'm going to bring in a fellow market analyst, and that is, of course, Michael. Michael, welcome to the show. Are you excited as me for the non-farm payroll today?
Good afternoon. Of course I am. It's another first Friday of the month, so let's see what comes up.
Exactly. I mean, this is a big event because, like we said, last month's number was a real shocker. It really was. But I think for those who are new to trading and for those to understand as well why we're so excited about this event, I think we should first of all start off by explaining what the non-farm payroll actually is.
Sure.
And why it's important. So, Michael, do you want to explain to the good people what it actually is and why it's important?
Sure, of course. So basically, non-farm payroll reports present the number of new jobs created in the US during the previous month, not including farm workers, and it is released by the US Bureau of Labor Statistics.
Exactly. And I love the fact that it's called non-farm because it doesn't have farm workers. It's an incredibly imaginative title. I mean, I think the reason why, especially for currency traders, this is a real dramatic report because the theory goes, if the number comes in better than expected, it could lead indeed to US dollar strength because if the job numbers are growing, it shows that the economy is growing. However, a weaker number, of course, does lead to potentially a weaker US dollar. So this is why it's so key. And I think at the moment, there is so much attention. I've got a lot of comments that sell gold. Okay, that's a strong opinion. Fair enough. But we'll be looking at gold definitely in a moment. Quite a few little comments coming up, which is lovely. This is great. People are talking. I love this. I love that. Thank you. Yeah, but I think the reason why this, it's great. It's great because this is the whole point of doing these live shows is so you can have like a community. So guys, keep chatting, keep talking away. It's brilliant. Like I was saying, I think last month was a real shocker, real shocker because it was announced at 73,000 versus 110,000 expected. Not only that, and this is something you and I will talk about in a little while. Not only that, the number for June and May was also revised downwards. Now, both June and May, they were around 100,000 initially. But June was revised down to 14,000. May was revised down to 19,000. Really showing there is a lot of concern that the US labor market is indeed really slowing down. And obviously, last month, this is why we're so excited about today's report. Last month, when that came out, because it was such a shocker, okay, it really caused a lot of dollar weakness across the board. And it was so bad that Donald Trump, who was not happy one little bit about this number, actually fired the head of the US Bureau of Labor Statistics. Okay, the actual organization releases this number. He didn't like it, so he fired her. It was basically rigged and incorrect. So it was massive, really. I mean, and this is why there's so much excitement today, because there generally is anticipation that we are going to see a proper slowdown in the market. Okay, slow down the labor market, that is, because there's so much concern, A, over tariffs, B, over AI as well, taking over jobs. So we are looking at a potentially a massive number. Now, of course, the expectation, oops, that's last week's, the expectation, of course, is for it to come in, today's report, that is, to come in at 73,000, 75, sorry. What do you think about that number? Do you think it's...
Yeah, obviously it's going to be a good indicator to see either if it's going to decline again, or maybe this time going to get a positive report comes out. Obviously, August is wrapped up, so which is usually a quiet month for traders and investors. On a good note, some of our clients made really good money over the past month, which is absolutely great for them. Even though in a quiet month such as August, which is usually at this time of the year, we can see still some good results, which is great. So the question now is, what's going to happen in September, which is usually an exciting month. People are back from the holidays. Investors, traders are really looking to get into that again. So have a lot of things coming up, starting from today with the NFP, and obviously it would be very interesting to see S&P 500 how it's going to perform, which is S&P is losing on average 0.7% in September during the past 3 decades. And of course, it has posted a monthly decline in 4 of the last 5 years, according to data compiled by Bloomberg. So the major markets begin from today with the NFP as expected. 70,000 jobs were supposed to be added. And now then we have following up in 6 days from now, the CPI, which is another indicator. So there's a lot of things coming up, exciting things coming up. So we should expect at least to see the market getting a bit more volatile than the last month.
Absolutely.
So let's get it right.
You're totally right, because August is often a tough month, and historically speaking, again, you're absolutely right. It's not a good month for stocks. Like I say, last 5 years, the S&P is closed on average 4.2% negative on the month. But I think it all starts today. September, it starts today with this job report, because if it does come in lower than anticipated, then it's going to be a really good sign, or a real further sign that the labor market in the US is weakening. As well as that, it's not just the NFP we're getting, of course. We're getting, obviously, the unemployment rate, which, again, is expected to rise to 4.3%, up from 4.2. We're also expecting to get average earnings month on month, which is supposed to stay the same month on month, but average earnings year on year is supposed to drop from 3.8 to 3.7%. Which is, again, a worrying sign that the labor market is indeed slowing down. Now, I've said this before, and we've had this conversation, Michael, haven't we? Okay, that the ADP report, which a lot of people say gives us a hint of what the NFP is. Some people believe it has a correlation. I've never seen it. Now, still, it's worth showing, or worth talking about. The ADP, indeed, yesterday was announced at 54,000. This is the private payroll, whereas the NFP is done by government. This is private companies, just for those people who are new to trading. ADP came out less than expected at 54,000 versus 65,000. Whether this is a real sign of what the NFP can be, I never count on it personally. But again, still, there is signs that the labor market is slowing down in the US. As well as that, the Labor Department showed initial filings for unemployment insurance rose to 237,000 last week. And that's the highest since June. So again, further signs that there is trouble in the labor market. So anyway, either way, the big question, the whole thing we're really excited about with this is because this is going to be closely watched by the Fed.
Mm-hmm.
Okay. And the Fed is going to judge their decision to cut interest rates this month. And there's a lot of anticipation that they will cut interest rates. Currently, the market is pricing in 95% chance of the Fed cutting rates. What do you think about that, Michael? What, in your opinion, do you really see that the Fed doing that? Because I say that is heavily priced in at the moment.
Yeah, I guess he does. I mean, he gave us a speech during August, which indicated that he's about to eventually do it. Obviously, Donald Trump is applying a lot of pressure on him for quite some time now. But I think this is the time for him at least to go down by 0.25 or even 0.5%. I believe we're going to have a rate cut this month.
Actually, a valid point. You're absolutely spot on with that because, like I say, Powell did have a speech and Jackson Hole symposium about that. And it's the first time he's ever really heavily hinted that he's going to cut, he's open to cutting rates. And yes, of course, there is a big debate about the pressure the Fed is facing from the Trump administration to cut rates. So again, a really, really, really good and valid point. But I have one question for you, and this is open to everybody else as well who's watching before we go to the charts and the scenarios. How accurate do you think this number is going to be? Because we've talked about it, there's always often been, every single time it's revised. And obviously with someone being fired last time, how accurate do you think this is going to be?
To be honest, I don't know. It seems that we'll have to wait at least for a month or so just to get the validation on the number.
Yeah,
and
totally.
Especially what happened for the last 2 months. It creates a bit of uncertainty, let's say.
Exactly.
A bit of chaos. So let's see. First of all, we need to see either it's going to be positive or negative.
Yeah.
And then we'll have to wait at least, I believe, 1
Absolutely.
month just to get the validation on the number.
We're a couple of seconds away. Let's go for some quickly. I'll go quickly through some scenarios. Potential scenario number one, NFP announced higher than expected US dollar gain strength. Potential scenario number two, it's announced higher than expected gain strength, but the market dampens the chances of the Fed cutting rates. And then the potential scenario number three, lower than expected, dollar weakens, and then the market ignores it. But straight away,
nice.
We can see the euro is spiking up. Now let's see what it is. Let's see what it is. Okay, it's a shocker, guys. It is a shocker again. It's a real shocker because the NFP expectation was to come in at 75,000 new jobs created. Actual number, you probably get revised. Maybe this person will also lose their job and get fired. Number is 22,000.
Wow.
22,000 new jobs created. That's a lot lower than the NFP expected. Unemployment. Let's look at what unemployment came in at. 4.3, like they anticipated. That's fine. 3.7 average earnings year on year, as anticipated. Average earnings month on month, 0.3, as anticipated. But the big one, of course, is the number 22,000. Are we really now seeing the effect of Trump's tariffs? What do you think, Michael? What's your opinion on that?
Yeah, I believe we do. I mean, even from the consumer side of things, there is already some increases in the prices. You can see in daily life products that the prices have been increased, and obviously this is something that you couldn't avoid. So it's very interesting to see how the market is going to react in the long term when it comes to the application of the tariffs. So it's important to see what's going to happen over the next 6 months in terms of how the market will react, where the prices are going to go, for how long they will keep increasing, and how can the market receive that pressure and to digest this pressure that is being applied.
Yeah. I mean, so I'm just going through some of the major pairs. You're absolutely right. Clearly, we're seeing a tariff effect. There's always that fear of uncertainty that these tariffs will start making companies more concerned about the future of growth.
Have a huge drop on the USD JPY, yeah?
Yeah, there's a huge drop on the dollar yen. Huge drop on the dollar yen. Again, because like I say, we're seeing a weaker dollar because a lot lower number. Dollar yen, 147.39 down, 0.72%.
Wow.
Okay, the dollar index in general also down. Massive, massive drop there. Gold, obviously, we're actually approaching another new all-time high with gold. Currently trading at $3,578 an ounce. Euro dollar, 117. British pound, back above 135.
Wow.
It's been struggling a lot because we've seen a lot of dollar strength leading up to this event. A lot of dollar strength. But as it stands, like I say, a shocking number. Again, another shocking event, 22,000 versus 75,000 expected. And like I say, we are seeing currently on this announcement a weaker dollar. And I think, we are beginning now to see the effect of Donald Trump's or the Trump administration's tariffs on the economy. As obviously, clearly, employers are getting more and more nervous about hiring future employers because they're worried about expansion of their business. Interesting. Let me just have a quick look. I want to look at one more thing. I want to look at something else about the previous number. Okay, all right, interesting. Now, obviously, the previous number, we talked about this again, how the number often gets revised. The previous number was 73,000, sorry. It was revised to 79,000. Okay, but that's, again, it's not a massive difference from the actual number which was announced. But that 22,000 is really a shocker. And we can see straight away a lot of volatility, certainly against the dollar. Dollar weakness across the board. We now just have to see how the market opens. And clearly, again, this underlines the fact that the Fed is now most likely will indeed cut interest rates come in 2 weeks' time, because they're going to have to try and inject life in labor in the labor market now. Don't you think?
Yeah, sure. And again, it's believed to be an exciting month. Once again, that was the first sign of signals we got about what's about to happen, but we still have many things to look that are coming up. Again, first of all, we have the CPI in 6 days, which is something less than a week, and then we have also the policy decision on the interest rates. So it should be an exciting month, and we should expect a volatile market.
Absolutely. I think, like I say, this is where it starts. Today is where it starts. It really starts. So yeah, you're absolutely right. I saw another comment here. You love gold. Obviously, someone who's watched me a lot and know me very well. Unfortunately, yes, I do. I'm a gold bug. I absolutely adore gold. I really, really do. It's my first love when it comes to trading. Anywho, so there we go. Another shocking NFP announcement. Another big event. I'm so pleased NFP is exciting again, because I remember the days, back in the day, it was the massive event. But over the last couple of years ago, it's got a little bit boring, but it hasn't been boring today, and it hasn't been boring last month. So yes, indeed, the NFP is back. So it does look like we might see a Fed interest rate cut in a week or so's time. But as Michael rightfully pointed out, you got to get through the CPI first and see what the CPI says. But anyway, that's the big news for the day. Michael, do you want to say goodbye to the good people and say thank you for your time?
Yes, of course, 100%. We are 54 minutes away from the US market opens, so let's keep an eye on it, see how the things go for today, and let's hope for an exciting week and for an exciting month.
Very true, mate. Very true. And thank you so much, Michael, for joining me on this broadcast.
Thanks for having me.
Always a pleasure. Never a chore. Just never steal my line again. Anyway.
See you later, people. Thanks for having me. Bye-bye.
Excellent. Thank you, Michael. Thank you very much. And indeed, thank you to all of you for watching this live broadcast with us. I mean, indeed, once again, the NFP has been a shocker. Once again, it is showing real signs that the current situation in the US labor market is indeed slowing down, which we are going to start to see dollar weakness, which is going to put more pressure on the Fed to act. It'd be interesting to see what Trump or the Trumpian administration has to say about this number and whether the new head of the Bureau of Labor Statistics still have their job over the weekend. But anyway, thank you once again for watching this live show. It's been really exciting, really good. Until next time, all I have to say is this. Don't forget, these little shows are for educational purposes only, and in no way whatsoever should it be taken as financial advice. I always suggest you do your own research, do your own diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.